Here
Good
they come.
morning, everyone. We are Mortgage Post 411. I am Audrey Boycino with my co-host Kevin Casey, and today we are joined by. Wait a minute,
Wait,
Kevin.
no, he
Who
looks
the hell
like.
is that? Where's
Does
Rick
he look like Rick
Betancourt?
Betancourt?
Oh, right. Rick has a severe case of laryngitis and cannot be with us today. So, what did we do? We brought in the A team, Jeff Wilson, VA Housing Education. VA housing educators and consulting, and a veterans expert, to say the very least. So welcome, Jeff. Thank you for joining us, and thank you for being able to pop on at the last minute.
Thanks, Audrey. I'm here today actually at the VA Rep National Conference in Orlando at the Hyatt Regency, right by the convention center. And if you've ever been there, that is one huge convention center. I don't think I've ever seen one quite that big. But it's been a great conference so far, having a lot of fun, making a lot of good contacts, got some good speakers. But hey, I'm going to throw a shout out there too. So if anybody knows about VA Rep, please find out, join. It's the Veterans Association of Real Estate Professionals. It is both realtors and lenders. So
Oh, wow.
It's a great organization, totally geared towards the Veteran Home Loan Program and teaching and education on the Veteran Home Loan Program, which is, of course, why I'm here, because that's what I do, is teach about the VA Home Loan Program.
That's
And
right.
you don't have to be a veteran to join. You can just
No.
be someone who
No,
gets
they
VA
have
loan.
they
Did
have
you hear
veterans, and then
they let
patriots.
realtors in?
They let
I know
realtors in.
that's
So,
crazy.
yeah, no, they have veterans, and then they have patriots. Patriots are obviously the non-veteran supporters of VA lending.
Right. Okay, so let's back up for a second, because I just want to we have a few reminders. Number one, it is NMLS season, just so you don't forget. The renewal period begins on November 1st. When is that? Really soon, like in a couple weeks, right?
2 weeks.
What?
2 weeks.
2 weeks, people. If you don't have your NMLS done by now, you need to get on it. So Mortgage Educators is a resource that you can use, and you would go to their website. You can either do it online, or you could join me next Monday live in Sausalito, where I will be teaching a class from a beautiful venue with gorgeous views of the San Francisco Bay, and you can knock it out there. So it begins in 2 weeks. It's important that you get it done. You can go to your NMLS Resource Center on their website and check to see if you have the green check mark. That means you're compliant. If you have a yellow check mark, it means you're missing hours. So make sure you visit Mortgage Educators website, use a coupon code COUNTDOWN for your CE. So we're going to do a little contest after November 1st, where you guys are going to tell us or show us when you renewed. We're going to throw whoever renewed, first into a little bucket, and you're going to come out and you're going to get a prize. And what is the prize?
We don't know.
Yes, we do. Next year, Kevin doesn't know. Typical. All right. Next year, you will get your Mortgage Educators Continuing Ed CE online free.
Oh, wow.
That's
Nice.
I know, right? Okay.
Yeah, so, and if there's a lot of people that's got it done by November 1st, we'll just throw you in a hat and pick a winner.
Yeah, or
It's already done.
Or we'll bully Mortgage Educators into giving more CE away for free.
That would be a good idea too.
I know.
2 things.
I
wanted to comment. So last year when we taught the NMLS class in Sausalito, 2 Navy jets went buzzing by underneath the Golden Gate Bridge as she was teaching the class. It was quite spectacular.
Wait, did they go under the bridge or over the bridge?
It was around the corner, so I couldn't see what they did. But
I'm just going to take a wild guess and assume it was not under, but I could be.
I think they may have gone under.
They can go under it.
Yeah.
Oh God. Okay, that I would like to see.
I've seen them go under.
Yeah.
I've seen them do a loop.
I actually flew in an F-16 trainer and went under the bridge.
Really?
Nice. Yeah.
Oh,
freaking
well
awesome.
Then. All right. Well, if you witnessed that,
we just had Blue Angels here this last weekend. They were quite spectacular.
They are spectacular. Yeah. Okay, so you may or may not have noticed that there are a lot of lenders saying, hey, we have the new loan limits for 2024. We just want to remind you, those loan limits have not come out yet. That is not true. So what they're doing is like they did last year and maybe the year before, it's all blurring together.
Last few years.
They are guessing what they think the loan limits are, and then they're coming out early because they don't want to miss the boat because other people are coming out early. So we're going to do our little crystal ball competition again this year, like we did last year, where you put in your guesses for what you think the new loan limit will be, and the tiebreaker is what date will they release it. And Kevin loves to give you hints, but we're not going to do that today because we have VA things to talk about. However, it's not on our website yet, but it will be. All right. So if you missed last week, which you didn't want to miss last week, because we had Mr. Mark McCardle on with the CFPB, and he, as always, was fantastic. So we got a lot of great information. We are not able to put it on YouTube. You figure out why, and it's just not allowed. And so anyway, next time he's on, you just want to make sure you're here. But the takeaway really was there were a lot of different things that we discussed. One of which was broker or LO comp on brokered loans versus closing them in-house, and whether it was an issue when you're doing that, if the comp was different. And so the takeaway from that seemed to be, if your comp on brokered loans was less than it is, if you're making less when you're brokering than in-house, then you're probably okay. And the question was asked, is there more of a focus on mortgages that there has been in the last year or two? The answer seemed to be no. We're a big part of financial services, so they do look at mortgages, but they're not scrutinizing us more than they have been in the last few years. So that was good. Kevin, anything else you want to add to all that?
No, there was that was actually the one thing I was going backwards, and I was just thinking about now is for the contest renewed by November 1st, make sure if you have to get your fingerprints renewed or your credit reports run, you get that done. That's my to-do list today, is make sure I get that done, because apparently my fingerprints have expired and I have to go get another FBI background check. Hopefully I pass. Hopefully I'm not, have FBI agents showing up after I do the,
Well, what Kevin doesn't want to tell you is that he didn't pay Guido and they burned off his fingerprints, and so they're no longer the same. And the FBI is requiring new evidence of what they look like now. So moving right along, shall we? Let's talk about VA, shall we, Jeff Wilson?
Okay.
So let's start with what is first and foremost in your mind right now when it comes to VA, and what the changes that are happening, the things that are good, the bad, what are you thinking about first?
Well, I was at the VA Lenders Conference I think it was early May, if I remember right. And in the conference, they talked about a lot of these new APIs that are coming out. APIs.
API?
Yeah, it's a short version for, it's a system upgrade, bottom line.
Okay.
That's the simple side of it. These APIs are doing all sorts of stuff. Like, for instance, one of the big ones is the closing API. So CDs, they're going to start requiring lenders to submit every CD to VA electronically.
Oh, that's big.
It's huge. So if your CDs right now, if you occasionally get an audit back from VA because, hey, you overcharged the veteran $10 here or $30 there or whatever, and they only look at right now 0.1% of loans, it's a pretty low number. And you habitually miss that number, maybe you don't realize you're missing that number, the VA system is going to catch every single one starting next year. And so every CD will be electronically reviewed. And if fees and charges aren't right, it'll get popped out. An actual loan specialist will look at it, and you'll get a notice from VA that you have to repay the borrower X number of dollars.
Wow. Well, and I'm wondering if they're going to, at the same time, because there have been so many lawsuits about targeting VA or veterans and taking advantage of them, churning their loans, et cetera, et cetera. I wonder if they're going to start keeping track of that kind of thing too, because it'd be super easy to do, wouldn't it?
They already do.
They are.
Lenders who,
how they're catching them.
I don't think, they don't really publish when they come out and beat up lenders. And I can tell you that just from my own history of audits on lenders when I was with VA. It's not made public. The lenders are aware of it. What lenders generally aren't aware of is when VA is actually looking at them. You
Okay.
know, VA looks at all sorts of data. VA looks at lenders' guarantee histories. They look at they do property profiles. When I worked for VA, there was one lender out there that literally churned a loan 11 times in 3 years.
Oh my God.
Yeah,
That,
can you imagine how many payments that borrower actually made in 3 years?
no,
It
not
was,
a
Not
lot.
too many.
he made 8.
How much
Wow.
did that cost that borrower, I wonder? Oh, you know what I mean?
Over the
everything.
course of that loan, the principal balance went up almost $200,000 over the course of that loan. And it was the same lender churning it every time, and the borrower just kept not making any payments, and they just kept churning that loan. And
Hopefully
it's
that's what they were
things
selling.
like that. It's things like that that caused Ginnie Mae to go to Congress and
Right.
have seasoning rules put in place.
Right.
You know, people think VA writes these laws. They don't. Congress writes the laws, and they write them based on problems. And so, since there was some loopholes in there that some lenders were manipulating on churning, that's why you get the seasoning rules and things like that. So we basically cut our own throats in this
Yeah.
industry,
Typical, right?
or at least a couple of bad actors
Yes.
slice everybody, you know, up. And so that's where we, as an industry, industry insiders, industry helpers, that's where we need to step up and call out our brethren who are not doing things right. You know, CFPB loves it when you send them over a notice that, you know, I'm aware this company's doing this, and they'll look at them. VA does too. You know, I've over this year, I've had 3 different reports back to VA, and they're looking at somebody because somebody brought me something and said, "Hey, I don't think this is right," and
Wow.
sure enough, that's not right. So it's be careful when you're doing stuff that's not right, because somebody's going to watch you and somebody's going to come in and beat you up over that.
You know, we're talking about this year in NMLS, the whistleblower. We discussed it last week with Mark McCardle with the CFPB. There is a whistleblower hotline that you can report people to, and people are like, "Oh, I don't want to be a snitch." And the problem is, it's not snitching. I mean, that's the old fashioned term. Now it is making sure that our industry stays right and the consumers are not damaged. And so we have an obligation, and it's hard to do this, by the way. You know, we talk about it, but I mean, it feels wrong, but
Yeah.
we need to shift that feeling, because these guys, we need them out of our industry. You know, we're watching the numbers diminish as far as LOs and everyone in the industry goes. And we don't really know what the real numbers are. When you see them posted online, just know that somebody made them up, because NMLS only reports their numbers once a year, and it's like the first quarter of the year. So, but we do know that from teaching NMLS this year that people are either not affiliated, they're semi-retired, they don't have a lender right now that they're working with. And, you know, our industry needs to be made up of people who are professionals, who are staying on top of their A game, who are doing the right thing by the consumer, making sure that our industry and our market stays healthy. Because if you have loans, situations like this, or loans that are going bad, et cetera, it is not good for any of us. So
No.
we've got to put that whole idea behind us and just go for it, you know, as far as making sure that if somebody's doing something wrong, report them.
So let me throw another couple things out there that I know that VA is now looking at. They're aware of some fraudulent activity out there where there's some advertising going on saying, "Hey, let's help you use your VA loan to build your real estate portfolio."
Okay.
Okay.
So here's the twist that they're using. The VA says that in order to have your entitlement restored, you must actually divest yourself or get rid of the property. You can no longer own it. If you still own the property, even though you may have paid off the loan, then you can get a one-time restoration to have your entitlement restored so that you can do another VA loan. And a lot of people don't understand the one-time restoration, but the law is pretty clear, and it was written this way specifically to keep people from building a VA portfolio, a portfolio of loans using their VA of property, because that wasn't the intent of the law. That wasn't the intent of the program. And so as a result, what this group is doing is they're telling people to sell your property to an LLC, and the LLC pays off the loan, and you own the LLC, obviously, and then you can get your entitlement restored because the house is no longer in your name. That's not what the law says. The law says you cannot have an interest in the property. In other words, if you have an interest in the LLC, you still own the property.
Right.
And it's fraud. And VA is aware of this now because they see advertisements. They see what's going on in the industry. People tell them about things that go on in the industry, and they actually start investigations. And the problem with investigations is twofold. One, they take a long time.
Yes.
Yeah,
because this is federal fraud. So it's not something that they're just going to come in and slap somebody's hand. Somebody's going to jail. But they don't advertise it when they do either. So you don't hear about it.
right. Until it's much far down the line.
Yeah.
No, until the FBI calls somebody at 3 o'clock or in the morning and says, we will be arresting you at 3 p.m. We heard that story once. And it was something they'd been involved with like 4 or 5 years before.
Years earlier, yes.
No longer doing, they're totally,
Yeah.
been on the straight and narrow.
Thinking that, oh
saying,
God, I did this stupid thing back then, and now I'm out of that. I don't do that anymore. Well, wait a minute, you still did it,
Yeah.
My God.
It's like, but officer, I'm not speeding anymore. You still were speeding.
That doesn't work for me.
That doesn't work either. So watch those things. Now, let me tell you about some of the other great stuff going on in the VA world. Some of the data is coming out from 2022 is just phenomenal. VA is now up to 14% of the mortgage market now.
Oh, holy moly.
In 2010, VA was about 2%. And now they're at 14%.
Well, and I saw a stat that's 650% increase from 2010 to 2020.
650% increase in loan volume. Anybody out there hears that myth about veterans not having good credit because obviously they don't have any money? Well, their average credit score is 722. Whereas the average credit score on a conventional loan is 718.
Wow. Yeah. Hang on a second. People, take note of this because we're going to really take a dive into how do you sell VA loans to your realtors and then their sellers, right? Because you want to be able to speak to them about the quality of a VA borrower. All right, keep going, Jeff.
Well, listen to these because these are going to take on those myths and misinformation that we all hear about. Veterans don't have any money, right? $54,000 is the average assets of veterans buying homes. They just don't have to put down payments down.
Right.
Doesn't mean they don't have money.
Right.
That's not even counting active duty veterans who have their TSP accounts that they're pumping gobs of money into.
TSP,
this is just stuff that's,
tell people what that means.
TSP is a government, it's like a government 401k.
Okay.
So military members have it, government employees have it. It's the thrift savings program.
There you go.
And it's basically a 401k. It never gets, I've never seen, well, I shouldn't say never. I've only seen a couple of people ever put it in their, listed in their assets. It's almost rare because it's a 401k. They're not touching it for another 30 years on average, So they don't even list it as an asset because technically you can't really touch it very much. I mean, you can take a loan against it if you want to, but it's kind of stupid because as soon as you do, it stops growing any kind of interest on that or earnings on that part that you took a loan on. So, they've got plenty of assets even outside the TSP. Actually, 20% of VA loans now have down payments, whether they need them or not.
Right.
The average DTI is 40. Yeah, 1% was it is 14% now market share. It was 1% in 2010. There are 28 million VA loans now have been made. 28 million. The average borrower, it took 44 years to get to the first 18 million, and it took 12 more years to get to the next 10 million.
Well, then just let's talk about in 2023, the number one lender has done how many VA loans this year, Jeff?
I think it's right around 45,000.
And number two is 23,000 or something like that,
23,000.
right?
Yeah.
So there's
Yeah.
a lot of VA lending going on out there. And do you have to live near a base to do VA loans?
Absolutely not.
No.
Lenders are all over, veterans are all over the place. And hang on a second,
Right.
I'm just pulling up this
Not just
data.
near the vets, the
There
base.
was there's another stat that I think is interesting because one of the obstacles is the funding fee, which is hefty, and 54% of veterans are exempt from the funding fee.
Correct.
Make sure,
And
what questions do you
now-
ask to see if
And why
someone
are they,
exempt?
Audrey, why are they, or Jeff, why are they exempt? Because?
I
They're
just-
exempt from the funding fee if they are in receipt of compensation for injury or disability while in service or as a result of service. So it's not as a percentage. It's not like you got to be 10% or 100% or anything like that if you're receiving comp. And there is some disabilities that are 0% disabling, yet they still get counted for compensation. And you get a whopping $165.33. So,
But if that could save you $1 zillion in a funding fee, that's a big deal. So make sure
yeah,
you're asking
saved me on my
every
last
single
loan.
veteran, every
Yeah,
veteran, you got to ask
It
the
saved
question.
me on my last loan that I just did February 22. It saved my funding fee. I'm a whopping 10%. But I think the bigger factor in that is that the misconception about the funding fee, that it's really expensive. When you compare the funding fee on a 726-200 loan, the funding fee costs about $96 a month and amortized over 30 years. Compare that to HUD's MI, and they're 1.75 upfront plus the monthly. Your average, and you compare loan to loan, it's going to cost an FHA borrower about $350 a month more for the same loan, even though they have a 3.5% down payment.
I've never seen that calculation before. That's interesting. Huh.
When you throw the MI in there, and then conventional wise, if you're doing a 90% and you've got MI on that, guess what? You're getting pounded with a huge MI, and that makes the VA loan that much better. And then obviously, if you don't have a funding fee, you just saved your borrower, tremendously. So why would anybody, agent, LO, whoever, talk their veteran into getting something other than a VA loan? It's going to always cost them more.
And let's talk about average close times, because my understanding it's under 33 days.
Yeah, that's cool.
It's better or close to.
Let me throw this number out to you. This was from 2020, actually 2023. It was 2022 and 2023 through April. The average close time for a VA loan is 32.9 days. The average close time for FHA is 42, and the average close time for a conventional is 43. So who's saying it takes too long to do a VA loan? If it takes your lender too long to do a VA loan, they probably don't know what they're doing.
So I don't know what universe people are operating in where they can get away with getting into contract with a 43-day close, but these are national averages, guys, just to be clear.
These are national averages, yes.
Yeah.
Actually, California averages are actually, I believe, faster than the national average.
Way.
Yeah.
But we have
realtors here all want 15-day closes.
Right.
Yeah, it's
so let's throw
harder
another
to get insurance than it is to get your loan closed. So
it is. Let's throw another one of these myths under the bus.
Okay.
Appraisal times. Yeah. It takes VA forever to get an appraisal done. And they always come in low. Well, here's the real deal. VA appraisals on average nationwide take 7.1 days.
Smoking.
Conventionals take 10.5 days, and FHA takes 9.2.
Okay. And then let's talk even beyond that. Let's say you get a VA appraisal and it's not going to come in at value. Talk us through that.
That's easy. So that's the cool thing and amazing thing about VA loans is on the VA appraisal, you get 3 chances at that thing.
Right.
So if the appraiser gets the appraisal order and they're looking through their data and they're like, I'm not going to make this, there's no comps out there to support this sale price. He's going to call Tidewater, that wonderful thing that very few people really understand where it came from or why it's called Tidewater, but it's Tidewater. And he's basically telling the lender, hey, I'm not going to get to the to the sale price. So the lender should be telling both agents, both buyer and seller's agents, hey, provide us, you got 2 days to provide us the comps that you used in order to set that sale price. Now, here's the problem that usually happens. The listing agent provides the comps that they used to set the listing price, but you're getting an overbid on the sale price. Now you have to find new comps to support that sale price.
Right.
And if you can't, half the time the listing agent is already calling in the comps that the appraiser's already using. So the listing agent has to look at their marketplace. And here's something that people forget about. There's a lot of houses that sell without agents. There's a lot of houses that are FSBOs. And they don't end up in the MLS as a listing. And it might take another month for that house to actually make it into the county record so that the appraiser can actually see it. So what they need to do is, if they know that there's a comp down the street that's sold as a FSBO and it's an exact match, find out what it sold for. Or if they know that a house just closed, but it's not hit the MLS, it hit the MLS yet, call that agent and say, hey, what did it sell for? And use those comps. Don't use the ones that they used to list to provide the listing, because you know what, the appraiser is going to come back and say that house is worth X. Guess what X is? X is exactly what the listing agent listed it for.
Right.
Because listing agents aren't stupid. They know what the house is worth in that marketplace. And so does the appraiser.
Right.
So if that still doesn't help, the appraisal comes back and it's still too low, then the staff appraiser for the lender should be requesting from VA a reconsideration of value. So VA actually reconsidered, where'd that go? How many reconsiderations were there? So about 6,000 reconsideration of values last year. Now, bear in mind, there was a 200 and how many thousand? No, 1.2 million VA loans were, there were appraisals done on one and closing on 1.2 million VA loans in 2021. Out of 2021, there were about 6,000 reconsideration of value. So that means that,
do you have any idea how many came in positively?
do the math on that real quick, folks. Just that many were low that got requested. That is such a low percentage. Anyway, to move on from that, VA then has the option of increasing the value for that veteran. They're not going to change the appraisal. They're just going to establish a new value for the appraisal, or for the appraisal, and say, borrower, you get this. Now, they may not always come all the way up to the value that has been requested. So when the SAR, the staff appraisal reviewer, sends the request into VA, they would say, hey, you know, the appraisal came in at X, we were hoping to be able to get Y. VA may come in and say, well, we can't quite get to Y, but we can get to here, which is, you know, say you came in 20,000 low on the appraisal. Maybe VA will raise it 10. That makes a whole new that's a whole new ball game when you only got a $10,000 difference.
Right. And if they have $54,000 in assets in the bank, then maybe they can come in with the money. Never know.
They can
negotiate the price.
Negotiate. I'll come in with 5,000 more. If you come in 5 and you drop the price 5, whatever. It sets a whole new renegotiation open there.
I've been blown away. You know, it's not just on VA loans, but on any loan. When the value doesn't come in, I have been so blown away by how many times the seller will just come down in price.
Quite often.
I mean, they don't have 20 offers.
Market right now.
Yeah,
it's a tougher market right now. You know, a year ago, they wouldn't have done
offers. You know, because sometimes when there's a multiple offer and let's say that, you know, the asking price was $495 and, you know, you came in at $550, right? And there were multiple offers. Well, they don't tell you that all the offers are around $510. And so all of a sudden the appraiser comes in at $530. Well, you're still ahead of all the other offers. So they're willing to come down. Because
maybe. That's a good point, though. That is a really good point, actually. I didn't see that coming, by the way, Kevin. So just because they got multiple offers doesn't mean they were all way over asking. So you might have some wiggle room there. All right,
Right.
good.
So there was a couple of questions in here. If you're watching the chat,
Yes.
I want to just touch on those. Someone asked, can you go over tax exemption for veterans? I understand this has been implemented in Texas. What about California? California actually does have tax exemption for 100% service-connected veterans, and they waive the real estate taxes. Texas waives real estate taxes. I think there's 32 states that actually waive real estate taxes on 100% service-connected veterans.
Wow.
In many states, if they're not 100%, but they are service connected, they do have some other exemptions. Like in Florida, they exempt the first, I believe it's $12,500 in value for less than 100%. Otherwise, it's a 100% waiver of taxes. Plus, in Florida, veterans have a homestead exemption that's another $50,000 of value waived off the top of their tax base. So a disabled veteran gets what is a service-connected borrower? Service-connected borrower, as we're talking about, is a borrower who has a disability from their service, was injured in some manner during their service. So that's a pretty cool thing to have that in so many states. Check your state, check with your state.
Is there a list that you could send us, Jeff?
I don't actually have the list,
Could you
but
get one?
what I would say to all of you out there is every state has a state Department of Veterans Affairs.
Mhm.
They're not associated with the federal Department of Veterans Affairs. There is a state Department of Veterans Affairs. You can call them and they can provide you with all that information. And in some states, it's different county by county. California used to be that way, but I think California standardized it. But they used to be different in different counties.
Okay, gotcha. We have a
yeah.
comment here that someone said they're so happy that borrowers can't refinance until 6 months of payments is over. I mean, don't you wish that we'd all go to on every loan? Okay, season requirement, that we not have an EPO problem, not EPO,
Right.
EPO problem.
EPO,
So,
yeah.
yeah, exactly. That's a good thing.
There was another good question here. If a non-veteran assumes a VA loan, can they be a first-time buyer? I saw somewhere that they have to prove 12 months on time mortgage payments. Can rent payments suffice for that? If you saw anything like that, that's some lender's overlay, and that's a stupid overlay. Anybody can assume a VA loan. Don't have to be a veteran. What's that?
Yeah, that's what I thought. Yeah, so
yeah, anybody can assume a VA loan. It doesn't have to even be their primary home. It can be an investment property.
Yeah.
The other cool part about it is, and this is something that a lot of people don't understand. Obviously, when you assume somebody's loan, it's probably got some equity built in. And so you're assuming the first lien and you're needing to come in with cash to pay off the equity so that the seller gets their value, right? VA doesn't control where that money comes from. It can be a gift. It can be borrowed. I'm not kidding you. It can be borrowed. What I've been telling people recently, because there's that whole issue that when you let somebody assume your loan and they're not a veteran and they can't substitute their entitlement for yours, your entitlement is tied up with that house.
Correct.
And you have no more control over it
Mm-hmm.
because that non-veteran can then someday let somebody else assume that loan.
Right. Right.
And if that veteran or non-veteran has a problem making the payment a couple of years down the line, and it goes to foreclosure, you have lost that entitlement. It's gone, poof, unless you repay VA for the loss. So what I was discussing this factoid with somebody, and then it dawned on me, how do you keep control of that loan?
Do a second loan.
You the seller carry a portion of the second. Well, the problem is most second lien holders are not going to give you all the way to 100% LTV. They're only going to let you go to 80, some 90. Okay. The best I've seen was a 95, but that guy had an 820 credit score. And so there's always a portion that's not there. And if the seller has the ability, they can carry that difference.
Yep.
Register it as a lien. Then if that first lien ever goes into default, they will get notified through court filings of the default because they're a lien holder.
Correct.
And that way they can then take control of and put their lien into foreclosure because
Correct.
the buyer or the owner is allowing the first to go into default, which would default their second or third, if you will, and get a hold of the first lien holder and say, hey, I'm going to foreclose on mine and I will bring you current.
Right.
Most of the time, they will just sit back and let you go. And you can
Wow.
get yours foreclosed on and take control of your house again and either pay it off, sell it again, let somebody else assume it, whatever you want to do.
Okay,
But
so that is, first of all, it's a really great caution about your borrowers who might want to let someone assume their loan, that there's some hair on that you want to make sure that they're really aware of. And, and again, if you're in a market where you don't have a line of borrowers standing there wanting to buy your house, then maybe this will look like an attractive alternative to you, but at least there is an alternative. I like it.
Well, think about it. In today's marketplace at 7% interest rates, I was just sitting through a Fannie Mae briefing this morning, and she said that they're looking at rates on average right now. I think she said 7.4% is the average rate now for Fannie. And when you think about that, and anybody who got a loan back, I'd say as far back as February of 22, you're still looking at sub 3% rates.
Mm-hmm.
Yeah.
I mean, let's think about that. If you're selling $1 million house and the first 700,000 of it has a 2.7% rate or maybe a 3% rate, and that buyer's going to have to come in with a 7% rate, that's like almost 3 times the payment.
Yep.
How much of a selling point is that? The other thing you could do as a seller is list your house with assumability for another veteran. Now, that means you don't have to keep your entitlement tied up.
Right.
So if another veteran comes in and has their entitlement, they can assume it, put their entitlement, which releases yours, so you can go back out and buy another house.
Right.
I've seen a lot of people starting to list their houses assumable to another veteran, not because they need to use their entitlement. So they're not allowing a non-veteran to assume it, but they're advertising it as assumable by another veteran.
Another veteran buys a house, assumes their loan, that new veteran that just bought it, the loan now goes under their entitlement, not under.
Yes, they can do a substitution of entitlement as long as they have the entitlement available to cover for that loan that was already done.
It's fascinating.
Great.
So another big one there.
We have a great question in the chat. I'm in California and VA has always required a pest and fungus report with a clearance on all Section 1 items. I have a realtor telling me the VA lender they are working with is not requiring the report, but did require a certification stating no active termites, but dry rot was not an issue. Is this a change of some sort?
No, it's an absolute error on the part of that lender. California, all of California, must have a pest inspection report, and any dry rot and fungus is going to show up on a full-blown pest report. They can use the state version, or you can use the NMPA 33. Either or, VA doesn't care. Both of them hammer on the same thing. Are there active pests, and is there any dry rot or things like that? California also has a mold issue too. California has a mold clearance as well.
So is that, wait a second, so go back. So they don't have to have the report, they just have to have the certification?
No, they have to have a full-blown.
They have to have the whole thing.
Pest inspection. Yes, WDI must be done.
Got it. Yeah, I mean, I sat in a
all
meeting.
of California.
Well, I sat in a meeting with VA a few years ago and in DC, and the question's always, what about this pest report? What about this pest report? It's really a problem. They were so clear that that is never going away. They are very concerned. They want to make sure that veterans are protected. That's their primary concern. And so stop asking about it, basically. So I can't wait to see how that loan goes. Keep us posted to the person who posted that question, because I'd be curious to see what happens. Somebody asked, what is the quickest VA close? Do you know?
The fastest one I've ever seen was 12 days.
12?
Oh, that's pretty darn fast.
That barely met all of the CFPB required days. The appraisal took like a day. And when I bought my last house in 22, that one took 17 days.
Yeah, but well, okay.
And I had no influence on. I mean, I could have influenced, but I didn't need to.
Oh, you had
I
an
ordered
influence.
the
You had
appraisal was
influence over
ordered
the
on.
LO.
Yeah,
You're
the
telling
appra-
here, you're doing it.
yeah, the appraisal was ordered on it actually got ordered on Saturday, but technically because of the weekend, the appraiser picked up the assignment Monday morning. She happened to be going to that neighborhood, so she called up the agent at like 8:30 in the morning, said, "Hey, can I go look at the house?" Sure. She was looking at the house by 10, and on her way out, the home inspector was on his way in. They got it inspected the same day, got the appraisal done the same day because the appraiser actually downloaded it the next day. And then I, of course, had all the docs ready and required, and all I had to do is sit and wait for the seller to finally get around to being able to sign. So yeah, I mean, it can be done
Her
super
whole
quick.
loan closed in 17 days. I thought you were saying that the appraisal took 17 days.
No, the whole loan closed in
Holy
17.
smokes, that's quick. That's awesome.
Yeah.
All right.
Appraisal took one day. Hang
Wow.
on, once I'm in my hotel room and the I think housekeeping is knocking on my door.
Okay,
Right
we
back.
will, no problem. All right, while we're at it, just wanted to let you know, I read this article this morning where they were talking about the buyback issue that FHFA has been imposing on independent mortgage banks recently. And so they're at the MBA conference in Philadelphia right now. And he was saying that that FHFA was saying they were looking at options and they're trying to like make things better. Anyway, bottom line is I heard from the inside, it was the same old dribble that we've been hearing for the last year plus, and nothing has been done that is helpful as far as the buybacks go, and that it's still an ongoing problem and just a bunch. And now we're headed into, the election cycle, which means that our, appointed director is, she's going to try and play nice with politics. And so I don't know. I have concerns about this whole buyback issue. All right. Nice to see you, Jeff.
Okay.
Thanks for
So
coming back.
anyway,
Appreciate it.
it wasn't housekeeping. It was my lovely wife.
It's
Oh.
not room service.
You just look at her and go,
The
get
bottle of
out.
champagne
Get
and
out.
So the next question that following on that, a couple of them there, lead-based paint. Lead-based paint is a huge issue everywhere in the US. It's got to be, if it's flaking, it's going to have to be repaired. I would tell everybody, and I tell everybody, look, listing agent, you can see the house. It's got flaking paint. Tell them to paint it, whether it's lead-based or not. Flaking paint is going to get called on every VA appraisal.
Okay,
So just have them paint it.
Can we just stop there for a second and have a little chat about the obvious defects in a house before someone lists it? For God's sake,
Exactly.
it doesn't matter if it's conventional, FHA, jumbo, VA. It doesn't matter, people. Non-QM. The collateral matters, and they're going to be called out. It's not like VA is going to go looking for peeling paint, call it out, and the conventional appraiser isn't. That's not the case.
No.
Everyone's calling that crap out. We just saw an instance.
or how about the buyer? The buyer's just not going to pay that much for that house. So why?
Well, I mean, okay, so
a can
again,
of $30 for a can of paint.
coach your
Yep.
realtors, not just for VA loans. You need to make sure that you you go with a broad brush because it's all loans. Look at the property. Are there wires sticking out? Is there some sort of hitch in the concrete where someone could trip? Do you open the sliding door and there's no deck and it's a 13-foot plunge to the bottom? Like, look for these things and address them up front. Are there handrails on stairways? I mean, obvious stuff, people.
I
So
had that one, the no handrail one. Oh, but it's always like that. Like, yeah, no one fell down.
So it's
yet.
always been wrong.
oh, and then the lender down the street will do it. Oh, right. So
Right.
so I can't wait.
The LO will tell you they'll do it, and then the underwriter will tell them to fix it.
It's so dumb. It makes me cranky. Okay,
So
keep going, Jeff.
anyway, so lead-based paint, always a huge issue. Let's talk inspections on
Okay.
appraisal issues. So if the appraiser calls out issues, the vast majority of those can actually be waived, but there's a couple things that can't. They can't waive lead-based paint. You can't waive serious hazards for safety. So if they've got bars on the windows that they can't get out from the inside, that's not going to get waived.
Every loan, people, every loan, same thing. Keep going.
Nothing in the VA requires appliances. Nothing. They have to have a means to cook and clean. You have to have a working bathroom. The house needs to be, I would say, habitable is the word that is used.
Yep.
So it doesn't have to be perfect. But too many people think that the house has to be perfect.
Right.
Now, when you get down to pest inspections, if there's problems on a pest inspection, Section 1 items have to be cleared. Section 2 items may elevate to a Section 1 item if they're looking at them. So for instance, a loose toilet is a Section 2 item. But when the plumber goes in to fix the toilet and finds out it's been leaking for the last 3 years and the wood underneath the toilet is now rotten, then that becomes a Section 1 because it's a structural issue. Same thing with termites. They might see some dry rot in the door frame and in the door finish, and they pull the door frames off and find out that the king and jack studs are all eaten up with termites.
Mhm.
That now becomes a Section 1 repair item structurally. So that can, your Section 2 items can bump into a Section 1.
Yeah, if they think your Section 2 is going to turn into a Section 1, there you go.
Yeah. And so, we get the other comment here from Jill. Borrowers have a different opinion about the condition of the paint. Sometimes they forget the issues that we all know about, especially during a refi. Yes, and don't forget, on a VA refi, it's a new VA loan. VA is going to be concerned about the condition of the property, and they have to get the paint done. Now, if they're going to be using the cash out refi to actually do the paint work, then bring that up during the appraisal process, and the appraiser can then identify it as repaired value, and then use that cash held in escrow through a repair or renovation loan and repair it that way. You can repair MPR items with a renovation loan from VA.
NPR, National
yes.
Public Radio?
No, MPR as in minimum property requirements.
Here we go. Okay, got it.
MPRs.
Got it.
MBA tomorrow with Lyle, Fanny, and then it says something about, will we talk about Bob Brogsmith's comments?
I can't, I'm so happy to hear I'm not the only one who doesn't know how to say his name.
For VA
Oh God,
appraisals,
I look at it and I'm like, oh God, here we go.
Okay, so here's a good one. For VA appraisals are trip hazards in concrete on the non-VA loans an issue too. Actually, trip hazards are probably going to be an issue on any appraisal.
Yep.
If it's just a hump in the sidewalk, it's probably not going to be an issue. If it's an actual pop of the concrete, it's probably going to be an issue. It is a trip hazard. It is something that can be injured. I had really fun one time. It was an older home, probably a 1930s home. And the current owners of that home had lived there for about 25 years. And the appraiser walked up the stairs and tripped up the stairs. And when he pulled out his handy dandy tape measure, he found out that the fourth step up was 3/4 of an inch taller than all the rest of them.
Yeah.
So guess what they had to do?
They had to
replace the staircase.
Yeah.
You can't just
The
fix
whole
one
thing.
stair.
Holy guacamole.
Yeah, they had to pull the staircase out.
Makes sense.
Because the people who lived there, their bodies knew, their minds were fully aware that stair number 4, you got to lift your foot higher.
Right.
It was their habit. They knew it. They never tripped on it. Maybe they did when they first bought it, but the appraiser tripped on it on the way up and just about, fell on his face, and they had to replace the staircase.
Okay.
Stuff like that
on his
happens.
way up. It was on his way down. It'd been even
Good,
worse.
good that it wasn't on his way down when he would have just probably tumbled over. Yeah.
I tripped up the stairs at Versailles, the Palace of Versailles in Paris a couple of years ago, because the rises in Europe are very uneven all over the place.
Mhm.
It never even occurred to me to tell Versailles, you know what, you should replace this staircase that was like 3 steps high.
Well,
after
they're not
hundreds
going
of
to
years of
because
people
they're
not
all
smashing themselves. It was a disaster. But if they were doing a VA loan on Versailles, they would need to fix that stuff.
Yeah, when you go to Ireland and Scotland and you're climbing through castles, steps can be a little off.
I know.
Yeah,
I know.
especially since all those staircases are stone and they've been there for hundreds of years and they're all worn. And so, Jill, James, you had another great issue there. You tried to escrow for repairs because it was winter and too cold to paint, but it didn't fly. VA actually has in the handbook that you can escrow for repairs due to inclement weather. Always. That is, but you have to escrow 1.5 times the cost of that repair.
But
It's
again, a
actually
really
in the
great
handbook,
selling
chapter
point
30.
when talking to realtors, if they've got a property that's going to have some issues, and again, they're calling this stuff out on all these appraisals, not just VA, the fact that you could fairly easily escrow that repair money is
Abs-
really
Absolutely.
great.
And a lot of it has to do with the lender. If the lender's not going to allow it, because it's usually an overlay on the lender's part, they're not going to allow it. Some lenders won't allow it. Then that throws me into another one of VA's APIs. Guarantee and payment of the funding fee is going to be tied together. So one of the problems right now that a lot of lenders have is they'll get their funding fee paid on time, but then it takes them 2-3 months to get the guarantee. And what happens when they do that, it immediately throws that loan into a mandatory audit. So if you take more than 60 days to get your guarantee, your loan is mandatory going to be audited.
Wow.
And VA's tired of auditing loans that they don't really need to, because there's nothing wrong with the loan. It's just the lender didn't get the dang thing guaranteed timely. So they're going to tie the two together. Now, a lot of times, the way the way the law reads is that the loan must meet MPR requirements per the appraisal before it's guaranteed. And that was all fine and good, because some lenders might take 60 days to get it guaranteed. In that time frame, they might fix some of those MPR items. But now it's going to be tied together immediately. So the loan will be guaranteed when the funding fee is paid. That will cause some lenders to be very careful about what they escrow for. But if they've tied the escrow to that repair, then it can still get a guarantee, and they just have to make good on it. And when they get that done, they have to report that it's done. Otherwise, VA can come back and say, you didn't get this done, it doesn't meet MPRs, and you're going to lose your guarantee.
Oh my goodness. Okay, so I'm going to talk about part of this just quickly, because Kevin and I rate these shows based on how fast they go. Like if we look at the clock, we're like, holy crap, it's almost over.
It's already 2:54.
Yeah, like we're already there. So we got a few more things I want to cover. We got to be quick about it. Okay, marketing to veterans. First of all, if you want a list of veterans, it doesn't exist. You can't get a list of veterans, right? You also cannot get on a base, but you can start to work with veterans groups. And why don't you talk us through that? Because it's different than, you don't show up and go, oh, I got the best rates and they're going to fall in love with you at all. They don't care about that. They care about service, right?
Veterans groups, because veterans have served us. The veterans population generally wants to see that you're there for more than just their money. They're very wary of people who show up and say, I got the best loan in the business, because they can go down to just about any block and find a lender that's going to tell them they got the best rate in the business. What they care about is putting your money where your mouth is. If you want to show up and you want to get their support, help them in their causes. Show up at their meetings when they're having meetings and teach them about their home loan benefit. Give them something back in return. That's another one of those big, huge myths, that veterans don't have any skin in the game. I'm sorry, veterans' skin in the game was their service for you in wartime and in peacetime. Right. That's the skin in the game that's better than any money down. And so that's what they're looking for. They want to see that you're going to be there, not just for their pocketbook, but also for their cause, for their support, and to help them and to teach them.
Right. So you show up and you spend time with them. It's not a one-shot deal. It's they get to know you. They know your heart. They know who you are. It's deeper than, hey baby, I got the best rates.
Mm-hmm. Real quick to Westmore. Yes, the second should be assumable on an assumption.
Okay. And then I want you to talk about some of the underwriting changes, including medical debts. Talk about that.
Yes, medical debts. One of the things from the conference that was put out by the chief of policy was that VA is not going to require the underwriters to actually consider medical debt any longer on the credit report. So all other debts obviously have to be shown and have to be addressed, but medical debt does not. That's not out in a circular yet. It's probably going to be another month or so before that circular gets actually put out. It's in concurrence, but the chief of policy said at the VA Lenders Conference, as of today, you heard it here, all 600 people sitting in this room, the medical debt does not have to be considered in DTI or residual.
So when you're up against an underwriter who says, you know, well, it doesn't have to be considered, but I'm going to anyway, that's their decision, and you can go
That's
to
their
a
overlay.
lender. That's an overlay. So
That's
just
their
remember
overlay.
that, people. That's a big, big deal. I mean, sometimes you have perfect credit and a huge medical collection, which can kill your deal. So, I mean, that's a big, big, big plus. Talk about student loans for a minute, Jeff.
Student loans are another big one. Of course, they're starting to hit again. They had all those waivers for a couple of years during COVID. Those are gone, and student loans have to be considered now. So student loans, VA has a ladder of how they have to be considered. So if the veteran has a waiver, or if the student loan is currently on forbearance, then you don't have to count it as long as that is for more than 12 months. So if they've got a 12-month deferment on their student loans, and let's face it, anybody on active duty, as far as I'm still aware, if they're on active duty, they don't have to repay student loans while they're on active duty. So that's deferment throughout their entire enlistment. Then the second rule of thumb on that is, if there's a actual dollar amount listed on the credit report, or if the student loan servicing company has an actual dollar amount that is going to be the payment, then they have to use that if it's less than 12 months away. So maybe in 6 months, they're going to have to start paying, you know, $400 a month, because the average student loan debt right now is like $396 or something like that a month.
Wow.
And there's like $39,000 is the average student loan debt. But if you consider that, and if they don't have either the income-based repayment plan, or if the credit report doesn't have a dollar amount, but their payment waiver expires in less than 12 months, then use the total of all the debt times 5% divided by 12. And that's the three steps ladder on how VA calculates student loan debt.
That's great. Okay,
Wow.
so I just want to say we have a few really nice comments that thanks, Jeff. You're amazing. I'm proud to be married to an Army veteran. That's from Margie. And then Grant said, I learned things I didn't know. Thank you, thank you, thank you. I've been doing VA loans for my whole time, 7 years as an MLO for fellow veterans. And
Awesome.
so there's some real nice comments here, and we really appreciate it, because he just stepped right into the ring today, and that's what you do.
What was that, about an hour ago?
Yeah. Thank you, Jeff. That was a little scramble in our
Very
book.
It was at least an hour and 15 minutes
But
ago.
hey,
Whatever.
we're awesome LOs. We know how to step up when something
Hey,
bad
we
happens.
we adapt, and we pivot. I mean, this morning, I literally, my first thing was like, okay, I want to keep it VA because we promised VA. And then, but it is in my head as I'm whittling down my list of options. I'm like, and if we don't
Listen.
VA, what will we be doing? Oh my gosh. Okay. Someone said, how do you calculate the 12 months on the student loan payments? Do they have to close by the date, or can the date be before the first payment? Is it the same rule for FHA?
It's 12 months on the deferment. So if the deferment ends within 12 months of closing, then you have to count the date. So it's 12 months of closing.
Okay. All right. So with that, Jeff, thank you, thank you, thank you. And we will see you next Tuesday. Go to our YouTube channel, please. A lot of people are really enjoying being able to go to YouTube, speed it up, and get through. And don't miss, somebody said, oh, you should do one on insurance. And I'm like, we did a few weeks ago. It was amazing. So go to the YouTube channel, check it out. The insurance
it's been really
is a
popular,
big deal.
actually.
What?
And that show has been really popular on YouTube. It's been surprising.
So Audrey, you said
Yes.
I get to also throw out one pitch.
Yes.
Yes. So as you can see in my background, VA Housing Educators and Consulting, it's what I do. It's my business. I teach. I have realtor classes. I also teach and I consult with mortgage people. I've got, account executives. I've got underwriters. I've got loan officers, companies and the consulting isn't that expensive. Literally, I fix one loan for you. you made
Let-
way more than my.
Let me
annual
attest
fee.
to that. I have a friend
So-
who's an AE who subscribes to your service, and she says it's totally worth it because she's able to just like, like if her underwriter's saying one thing, she can get the real answer. So Jeff, tell us your email address is jeff@vahousingeducators.com. Jeff
Yes.
at vahousingeducators.com. We'll throw your contact information into
Yep.
the YouTube channel. So go to YouTube, Mortgage Pros 411. And what else do you want them to know?
I'm on LinkedIn, Facebook.
He gets
Every
around.
Monday, every Monday I do a Mortgage Monday on my LinkedIn, Facebook, Twitter. No, not Twitter. Instagram.
Instagram.
No, I don't do TikTok yet.
Oh,
Instagram.
yeah.
So, I put stuff out every week, talk about Mortgage Mondays. And then if anybody needs or wants to sign up for consulting, give me a holler and let's talk about what we can do for you.
And while we're at it, I want to put a plug in for the National Association of Mortgage Brokers certification. They have a really great VA certification. Jeff is one of the instructors. So by all means, check that out on nam.org. And with that, people, we will see you next Tuesday at 11 a.m. Pacific, 2 p.m. Eastern. We are so happy to see you, and we're really grateful to you, Jeff. Thanks for filling in.
Somebody already on
So
this
great.
call already just sent me a Facebook request.
Perfect.
Nice.
All right. Well, you're gonna have
Don't
some
forget-
new friends today. Have a
Don't forget the
have a great week. Have a great week, people.
What Kevin, what were you going to say?
I said, don't forget the code for mortgage educators for your last classes there
Oh,
for
yeah.
different states. The
Countdown.
Countdown is the code. You get 60% off.
Yeah, it's a big discount. All right, kids, have a good one.
Thank you all for letting me talk to you for this last hour.
We love
Thank you,
it.
Jeff.
Bye.
Awesome.
Bye, everybody.